Hey everybody, I'm Norris. It's January 27th, and this is the Real Estate Headline Roundup in Today More Than Two. So lots of news up today, probably going to take more than 2 minutes, but a lot of really important stuff out. RealtyTrack says foreclosures fell to 20% of U.S. purchases as banks held off in the third quarter to scrub foreclosure docs and their processes. They expect to increase once the robo-signing settlement emerges and is finished. Moody's Investor Services said loan modifications are continuing to decrease. Loan servicers are now looking to alternatives for loss mitigation, including short sales. Pending home sales decreased 3.5% in December after reaching a 19-month high in November. New home sales missed their mark in December, off 2.2%. First-time unemployment claims increased. The U.S. economy grew 2.8% in the fourth quarter of 2011, which was the fastest it grew in 2011. Annual growth was 1.7%, which is half of what it was in 2010 and the worst since the recession. Yikes. FHFA announces prices of homes decreased year over year in November by 1.8%, and new home sales decreased 2.2% last month. This came unexpectedly after 4 months of increases. 30-year mortgage rates increased for the first time after being at record lows. What is it now, like 3.5? The Federal Reserve announced this week they intend to hold interest rates low through 2014, and it's thinking of purchasing more assets to boost the economy, what they're calling quantitative easing 3, or QE3. Illinois Attorney General Lisa Madigan joins the party filing a lawsuit against S&P. Madigan blames the agency's high ratings of mortgage-backed securities for the financial crisis. Expect to see a lot more of these kind of lawsuits coming out in 2012. New York Attorney General Eric Schneiderman is now co-chair of the Federal and State Mortgage Crisis Unit in the newly formed Consumer Financial Protection Bureau. He plans to pull together all the efforts and research that state and national investigations have done, and just trying to get down to the bottom of the mortgage meltdown. As the settlement for robo-signing mess comes to a close, other banks might join the party. U.S. Bancorp and PNC hopes to sign on to the year-long settlement negotiations. Principal reductions will most likely come about from the settlement, but it is not expected that these reductions will greatly decrease the amount of negative equity in the housing market. Obama did get the all-clear to raise debt ceiling by $1.2 trillion. The limit is now raised to $16.4 trillion. In his State of the Union address this week, Obama says he will pay for the new debt by military spending cuts. Obama also announced in his latest State of the Union address he has plans to save homeowners almost $3,000 a year by allowing refinancing at low interest rates. The program differs from the recent HARP changes because under his new plan, your loan doesn't have to be backed by one of the GSEs. Money for program would come from a small fee provided graciously by large financial institutions that got bailed out by the government. The plan already has some critics complaining it might be sadly ineffective, like many of the government's solutions, and will just postpone the inevitable. Wells Fargo is teaming up with a nonprofit, Neighborhood Works, to launch 2 multi-billion-dollar programs to clear REOs off the books. The new program, called Neighborhood Lift, commits almost $12 billion in Los Angeles and Atlanta over 5 years. Money will go to down payment assistance programs, renovation financing, and other homeowner programs. Sounds a little bit similar to the 203K program. The FHFA released an analysis of how much a principal reduction program would cost Fannie and Freddie. The GSEs already owe the government around $151 billion. The report says a principal reduction program would cost taxpayers another $100 billion. Yep, that's with a B. Forbearance and modification seem to be the tool of choice for the moment. Principal reductions, on the other hand, continue to be discussed, and we'll see as we go into election year. Finally, look out for a replacement for FICO coming soon. A group of entrepreneurs are using computer programmers to write algorithms that would identify potential borrowers that may have low FICO scores but would make great loan borrowers. These new methods would allow for less in fees and even lower interest rates. If you haven't got enough news, you can always go to our blog, thenorrisgroup.com/blog. You can also touch base with us on Google+, Facebook, Twitter. Let us know if we missed any really big articles. Up on the radio show this week, we've got Robert Kleinhenz. He is the newest economist for the Kaiser Center at the LAEDC. February 4th, we're going to be in Los Angeles teaching the advanced investing skills and strategies for Quadrant 2.5. February 14th, the Norris Group has its REO Bootcamp. If you haven't looked at some of our more advanced training, you can find out more information on that on our website, including where you're going to find information about our hard money loans, both a short-term and a long-term program for you buy and hold kind of investors. If you're looking for 9% returns, check out our trust deed investing website, tngtrustdeeds.com. Have a fantastic weekend, and we'll see you next week.